Carole, in some ways this was a much more muted response from OPEC. Are we reaching the limits now of what it can do? Are we getting to a period of stability?
I mean, it depends really on how you read it, because yes, you can say it's a modest increase because some people were expecting a much higher unwinding of barrels of the voluntary cuts of the 1.65 million barrels a day voluntary cut, which were the second tranche of voluntary cut introduced by 8 members, especially after we saw how over the summer they unwinded their first tranche of 2.2 million barrels a day quite rapidly. So therefore, today to see 137 barrels a day, maybe some people must have seen this as modest or not on par with what happened over the summer. But it is nevertheless a continuity in terms of the direction of the travel, because last month for October, they already announced a similar amount. So they are continuing with this cautious approach. And also it's still an increase. It's still putting more barrels in the market, bearing in mind that the seasonality of the demand, both in the Western Hemisphere with the holiday season over, the driving season over, but also domestically in the region, especially in the Middle East, where we use lots of oil to cool our houses in the summer, that the seasonality of the demand is also tapering off. So that has encouraged a more cautious approach. Now, some people would say, oh, OPEC is still testing the market because prices have not crashed. That is true, but we have to keep in mind that what is OPEC is announcing on paper is not actually what is being released in the market.
Sure.
With some claiming that only around 60% of the 2.2 million barrels a day made it to the market, because some producers have to compensate and others, like Russia, don't have the capacity to put more barrels in the market.
Carole, I understand that from a supply side point of view, that actually in reality we don't see these barrels arriving. I'm also aware of what is happening on the demand side as well. The Chinese in particular are buying a lot of crude and putting it into storage. Is that one of the key reasons why we haven't seen oil prices coming sharply lower? And then that begs the question, will the Chinese continue to buy?
Absolutely. I mean, if I look at the demand side, I think China is the main component in terms of keeping a floor to oil prices. So what we have seen so far, I think if you take China out of the equation, prices would have been much lower. But the Chinese are buying not because their economy is booming. It's primarily for stockpiling, including strategic petroleum reserves, and especially when they have access to discounted, attractive, cheaper oil to buy from Russia and other places as well. So of course they are buying, and the big question as we go into 2026, and this is where you can see the kind of consensus among analysts observing the market, observing the Chinese economy, observing domestic consumption and their imports need. The big question is for how long and for how much more will the Chinese continue to buy and salvage oil demand, especially in the absence of a global growth in the economy that would fuel a global growth in oil demand. So all eyes are on China in terms of the strategy, and nobody really knows. All the numbers that we have are primarily guesswork, because the figures when it comes to inventories in China are not publicly available. There are lots of opacity around the Chinese figures. So we're all a bit engaging in some guesswork about what's happening in that part of the world.